guys? Chris Valdez with Horizon Consulting Partners, here to provide you some tips when looking at franchise brands. I talked on one video about the steps on speaking to franchise companies and what someone should do, but a lot of times people leave out in the process, while you're kind of walking through the process of franchising, to make sure you have a great lender, a great CPA, and a great franchise attorney to review these documents so that it's reviewed and that you feel comfortable with the language, or also have a better understanding of what it is that you're agreeing to if you were to do a franchise. So why it's important to kind of get pre-approved for a loan if you're really interested and serious about franchising. Really, the pre-approval is nothing more than giving you the opportunity to know how much money the bank is willing to lend you to start a business. So if you're able to get up to $100,000 or $150,000, it doesn't really benefit you to look at brands that or small businesses that are past that range, because you're not going to be able to have the funds to do the business unless you're using your personal cash to aid in the extra amount that you need. Now, if that's the case, then that's a different story. But getting pre-approved early on in the process with a lender is important. If you do it the right way with the lenders that we send you to at Horizon Consulting Partners, they do a soft credit check, so it's not a hard credit pull. They're gonna giving you essentially sending you to a website, asking you for a username and a password, asking you to look at your credit, and they'll ask you for that login information so they can assess your financial situation and see where your credit score is at. You really want to be around a 700 credit score in today's economy for a business. So if you're looking at an express loan, you want to it's a Small Business Administration Express Loan is what it's called. They give you up to $150,000 if pre-approved for a small business loan. Some of the requirements that these banks want to see is that they want to see that you have a liquidity of roughly $50,000 to $75,000, probably closer to $75,000 in liquidity, a credit score of around 700. It's not saying that you couldn't go a little bit lower than that, but 700 is kind of the mark today, and they want to see a net worth minimum of $150,000 or above, of course, for this product here. The nice thing about the express loan is that what you put down is 11% of the amount you borrow. So hypothetically speaking, if you borrowed $100,000, you're going to take 11% of that loan, which 11% of 100 is $11,000. You're going to take $11,000 out of your own cash and put it towards the business that you're starting, which is in this case the franchise. That's when once that's all the minimum requirements have been made, that's when they'll fund your new business checking account with that $100,000 or the amount that you're borrowing, of course, whatever that number is, into your new form business checking account. The interest rate is 6% variable today for the express loan. There's other loans called like the Dream Loan. They lend you money up to $350,000. Now, the express loan and the Dream Loan are both 10-year notes. No penalty for paying it off early. It's a 6% variable interest. The difference between the express loan and the Dream Loan is, the express loan, they're going to require you to put down 11% of the amount you borrow, and then the minimum requirements for net worth and liquidity are going to be a little bit different. For the Dream Loan, you're going to put roughly around 20% down of the amount that you borrow. So if you borrow $300,000, they want you to put at least 20% of that. In this case, it's going to be 60,000. Sorry. It's going to be a 10-year note, 6% variable interest rate. Your net worth needs to be higher, roughly $350,000 to $400,000 of what you're borrowing. You're needing a liquidity of closer to $100,000 for that loan, and then a credit score of 750 or above. So depending on the requirements, or the loans can depend on the requirements. Again, these aren't exact figures. Obviously, we'll send you to a lender so they can talk to you about that, but getting pre-approved is super important. Secondly, it's super important to also talk to a great tax professional, somebody who understands small business. And the main reason for that, they're going to help understand your current situation financially and what the best tax advantages are going to be for you and your family. If it's a dual income family and you have children, it's going to be a different tax situation than a single person, obviously. Or if you're just married, no children, right? It depends on your debt. There's going to be a lot of factors there that a tax professional could help you out to make sure that you're taking the appropriate deductions that are legal with the IRS, of course, and that's going to be most beneficial for you. So they're going to discuss tax advantages, and you should have a good accountant who understands business set up. So it can be an LLC, an S corporation, a C corporation, all these joint partnerships that someone could potentially have as well. So that's also an important step that at least our firm introduces you at the right time. Lastly, you want to make sure you talk to a franchise attorney at the end of your exploration process with a franchise. You want a good attorney that can help you look at the legal aspect of franchising, look at the franchise disclosure document, or the acronym FDD. Also, the franchise agreement, which is what someone would sign, and they're agreeing to those terms and abiding by these terms with the franchise organization that they join. So you want a professional who understands franchise legal language and the franchise industry to look at it. Not saying that business attorneys don't have great backgrounds and don't understand business, but it's like, attorneys are sometimes like doctors. They have different practice areas. An orthopedic surgeon's going to focus on bones. An internal medicine's going to focus on something different. A cardiac surgeon's going to be something different there as well, more heart related. So same thing. You're not going to hire a divorce attorney to look at your franchise disclosure document and your franchise agreement. At least we wouldn't recommend that. So, not saying that attorney isn't good and not a great person, or it's not a great firm, but you want a professional that focuses on this segment. So that's some of the tips that I wanted to provide you here today. If you're looking into franchising, make sure you get pre-approved so you're not wasting your time looking at things that are not going to be beneficial to you. Secondly, you want to make sure you talk to a tax professional. And lastly, talk to a franchise attorney. If you have any questions, feel free to give us a call at Horizon Consulting Partners at 864-638-1046. Appreciate you watching this video, and follow us on social media. Thanks.